Good evening, everyone. Before we get started, I wanted to quickly set the stage so you all have some context. Firstly, my name is Sean, and I'm a senior associate here at 500. My job is largely to work with a number of corporate investors and innovators on projects related to startup investment and startup partnerships. This event is being hosted as part of our ongoing Slack community called 500 VC. 500 VC is an invite-only Slack community for corporate and institutional investors to engage in helpful conversations, networking, and ultimately empower founders. We host networking events, startup presentations, and discussion series like this one. Within the Slack group, we started the corporate venturing channel to be a collaborative community through which members can share best practices and learnings, as well as help enhance the perception of CVC among the startup ecosystem. If you're at all interested in joining the community, please feel free to shoot me an email, which I'll drop in the chat after this introduction. Real quick about the event. CVC Insider is a bi-weekly speaker series featuring top corporate venturing practitioners sharing their unique journey into CVC, specific challenges, and best practices they've developed as a result. We will have Q&A throughout the session, so feel free to ask questions in the chat and we'll do our best to cover them. Now that you know who we are and what's going on, I'm going to hand it over to Nicolas to kick things off. Enjoy.
Thank you, Sean, and thank you, 500 Startups. Again, this is a really meaningful initiative that helps everyone to learn more about corporate venturing and all the best practices that everyone really should know, and the earlier they know, the better. Today, I am super happy to have Gen joining us. He's the CEO of Sony Innovation Fund, and he has many more job titles, and he can explain all of them to us. Just so that you know, first disclosure, we are co-investors together in Echo, which is a really cool medical company, ultrasound company. But also is going to be, maybe it's going to be too humble to say it, but he was just awarded number 11 of the Power List 2020 for every corporate VC that the GCVI is looking at, which is more than 2,400. So today we have a really special guest, and I'm looking forward to have a conversation with Gen. Gen, do you mind giving maybe 5 minutes introduction about your personal journey all the way to corporate VCs, and what do you like about CVCs?
Sure, Nicolas. Thanks very much for the introduction, and it's great to meet everyone here. So maybe I'll just talk a little bit about myself and how we set up the CVC in the beginning. So I've been with Sony for 16 years now. I used to be a Merrill Lynch investment banker, and Sony was my client. And the CFO then said, please come over to this side. And so I luckily joined the company. And during the 16 years, basically the CFO then told me, first, get to know Sony. And so I went to San Diego to join the sales group there. And so it was a fascinating experience. After that, I've done the head of investor relations. Before doing the CVC activity, I ran mergers and acquisitions for Sony globally. I also spent some time as the strategy head in our mobile phone unit. And for the last 4 years, I've been basically focused on the CVC activity. So 4 years ago, back in 2016, I was called by the CFO and was bluntly told, we're going to start a CVC and you're going to run it. And of course, you know, it was a group of people that we started with, but so then, okay, so what do I do? So I basically started from scratch, and this is a conversation I often have with many of my CVC colleagues, because many people have had the same experience. And after 4 years, we have a global group. We have roughly 30 people, 10 in Japan, 10 in US, 10 in Europe, and Israel. We recently added the India leg. It's not that the 30 people always work for the CVC. Some partly work for tech scouting, some partly work for M&A transactions. But so an added, I would say, on maybe 15 people on a time-adjusted basis are members of the CVC group. We've made roughly 70 investments to date, and so that's who we are.
Very nice. Thank you again. So maybe I will double click on one thing you said, which is one part of your journey was M&A. How important and useful is it to have M&A as part of the profile before starting a CVC?
Well, profile, I mean, so I think one point I want to make is that when I started the CVC teams, I think I found basically we pulled together many internal people, mostly internal people. And what I found was that some people had M&A backgrounds and were great at execution, but were not used to going out to conferences and meeting startups and getting to know startups. Some people were really good at tech scouting and going to conferences and finding new opportunities and introducing them to Sony. Some people were really good at pulling out Sony resources and pulling together a business development discussion. So in the first 1 to 2 years, we went through a pretty massive cross-training exercise of internal people. And now that has really paid off. And I think after 4 years, we have a pretty strong team. Because obviously, as you know, in this business, Nicolas,
Yep.
you need to be out in the market and know what the investing is, but you also need to know the parent, what resources that exist in the company very well.
I just watched an interview by Toyota AI Ventures, Jim Adler, and he explained it so well, which is it's like CVC is like a membrane between the startups and the mothership. And you need to really be good at both sides. And I think what you're describing is exactly this challenge. You can't be too much one side and you can't be too much the other. You need to find the right balance. So if you could go back in time, would you try to have external people earlier than you did?
So I think first, I think it's important that to make a really interesting group of people. And I think, so I think we did that with internal people, and then external people would be interested in joining the group. This is the big difference from M&A and investing, CVCs, is that M&A is a very closed environment. It's a need to know basis discussion.
Yeah,
and so, I mean, you are only dealing with a very, very small number of people, but I think I love the open community of the CVCs. And so I think it's important that you sort of build an interesting team, and which creates, and the word of mouth makes a lot of interesting people try to want to join the teams. And I think that's quite important. One thing I felt strongly when I got this task was that I was fortunate to go to Stanford when I was very young. And so more than half of my classmates have gone into the startup or the venture world. So I knew how high the bar was in terms of the quality of the people that were going in. And so I think it sort of made, trying to meet this high target has always been on my mind ever since.
Very, very nice. Thank you. I also want to double click on something you mentioned, and I'm going to be a little provocative because I had a teacher, Ilya Stribulov, who is the person who looked at so many CVCs. And when I had a class with him, he said, CVCs that report to the CFO are not as performing as the other CVCs. But in your case, the initiative came from the CFO. Could you tell me what it was like and what could be the trade-off for other people thinking about starting a corporate VC?
No, I remember that Ilya's comment, and I also said that to my CFO, and he was laughing. But so I think the good thing about how we structured was that when we when we announced the CVC program in 2016, the CEO then, Kaz Hirai, now he's recently joined the Consumer Electronics Hall of Fame, but he made it clear that he's not going to get involved in the each individual decision making, because if he gets involved, basically the whole Sony, I mean, finance, control, everybody will be involved. And that it's just going to take too much time, and we won't be able to be as nimble. And so we formed an investment committee, which was independent which was independent and made its own decisions. Basically, we brought in 4 R&D heads and 2 new business heads, and formed the committee. And we meet once a month and make a decision.
Very nice. And
so yes, and so maybe just to add, I think I'm very fortunate that my CEO Yoshida-san and my CFO Totoki-san both were managing a subsidiary of Sony, which was a public subsidiary, and which was more of a very incubative company. And so both my CEO and CFO have hands-on, long-time experience in the startup world, and that's helping me tremendously.
I think that's a big, big plus. And also the fact they knew that they should really delegate and empower you, I think is a big advantage. Okay, I want to ask a very open question now. Can you tell me since the very beginning where you launched the corporate VC to today, what was your most proud moment?
The most proud moment is, well, I think, how can I get better year over year? When I look back to the previous year and compare it with now, am I better on all fronts? I think that's been my real checking point throughout these 4 years. And, based on the observation that all my management makes, or based on the reaction we're getting from the community and the press, I think as far as looking back at the 4 years, we've been doing that. And so, I mean, and how do we do that? It's really the strength of the team. I think we have US teams, European teams, Israeli teams, India teams. We've spent quite an amount of effort on one team building. And I think that's really paying off in this environment. I may not be answering your question directly, but
I think it gives a view that you want to keep improving, and you really look at the improvement, not just for yourself, but the full team. And one thing you mentioned much earlier was the training efforts you did, and now you're talking about team building. Is there any tip you can share about team building inside a corporate VC? Because this is quite different from a sales team or a control team or different type of teams. And also what type of training you thought was most useful?
So I think to bringing together people with different backgrounds and having them be very open to each other is maybe too a general way of saying this, but and to consistently do that, I think is quite important. But I think the openness of this corporate venture community obviously helps significantly. I think some of you met, Austin Nerona in my group, or he has a long-standing relationship of working with startups. There's another managing director called Joe To. He has a very strong, more of a, semicon and also M&A background. And so that, these bringing people with different backgrounds and having a really open discussion, I think really helps. And so COVID is is in a sense, there's the, obviously the negative side of COVID is that we cannot travel. So, and that we cannot, so I cannot physically meet or see the demo. And of course, engineers need to see demos or, no investment. But I think what's on the flip side, because we have significant trust among the teams between in various areas, and we spend so much time talking over video as to where we want to invest.
Yep.
And so in many cases where you are allowed to travel, you say, okay, let's wait until I get to US and then we talk about that. Now we says, let's talk about it right now. So that is actually enhancing the deepness of the discussion. So I think there's the positive and the negative side. There is some positive side even in this COVID environment, I think.
I think the way we work as a team, the way we look at startups, the way we consider them is so different and way more dynamic than it was before. I can totally relate to that. I just want to have a follow-up question on the training side. Now it's been 6 months since we've been in this COVID-19 environment and constraint and restrictions. How do you keep on training your team despite that?
Well, training, is, you can generalize it, but in reality, it's a very accumulation of very small tasks. And we are maybe in the future we should create a more of a chat mechanism internally, but using email. But currently we're using email, and a lot of people are copied, and we keep a very strong culture of trying to intervene into everybody else's deals. So this actually allows even some of the junior members to really take the lead in terms of a discussion, and we'll just missile lots of questions, and just and not just me, but many other people participate, and this will just go into a pretty I think a constructive discussion, and because that deepens the understanding for that junior capitalist person, and we just constantly continue to do that, I think.
Yeah. And now I want to move. So we talk about COVID-19 clearly, and you talked about it earlier this week during your presentation at the CIS 2020. You talked about being a path leader, and especially, I think, post-COVID-19. Can you tell us more about how you see post-COVID-19, the world, how is it going to be different, and what does that mean for you?
So it's a big subject, but maybe I want to go back a little bit about how I see Sony, and in a sense the culture we have, which is somewhat unique. So Sony, the current management of Sony has worked with the founders, Mr. Morita and Mr. Ibuka. So many of us continue to think we're a startup. And I think at the same time, I think many people know this, but PlayStation was formed as a joint venture between the electronics company and the music company. So the internal joint venture mushroomed into the biggest businesses we have. So creativity is actually quite fostered in Sony, and that's why we have a pretty diverse set of people here. And in accepting the CVC head position, I think I felt that was our biggest asset. And so I mean we work with hundreds of engineers in the company, which are also very creative people. And for them in the COVID area, they also cannot travel as much. But so the information we can tell them as to what's going on in the world, because we continue to meet many, many startups over video. The general landscape and the changes in the landscape we tell them is actually quite important information for them to really think about a lot of the things, about a lot of where the market is and what people want to do going forward. So that's why I said that they'll use the word pathfinder. So some people may look at you and says, oh, you're so finance oriented, and this strategy focus or finance focus is just I mean, it comes out on the ABCs of CBCs, but I think when some people say that you're very finance oriented, I would say we're chasing where the world is going. By being finance focused, we can tell where the world is going, and I think that's probably what you want to know the most. And so that's the kind of discussion we're having internally. One time, an engineer came to me and says, "This company is so strategic, and we should invest in the company." But after 2 years, then the company is not doing well. Then I look at the engineer and says, you said that this was so strategic, but the company's not doing too well. And he would look at me and says, did I say that? That's the attitude. So, I mean, in terms of making investments, the team needs to make its own decision.
I think so what I believe is, if you are financially driven, it means you're focused on picking the winners. And the future is built by winners. So if you're only strategic and you don't care about financials, you're not going to have actually the strategic value back. And I think I've shared this view before in other interviews, but when I hear the question, are you financial or strategic? This is a wrong question. Is how do you combine the two together? Can you talk about how do you combine the two together? How do you or which one comes first in terms of your filtering to make sure that actually you really pick the winners?
Well, so we believe we have invested in the winners. This will only be pan out over time. But I think we try to keep it very no strings attached when we make the investment. And so, I mean, but when we evaluate the company, we also involve other Sony members in the evaluation. And so, engineer A, engineer B may say, this company is really interesting. And so if they felt really interesting, let's say after 2 years and the startup is really ready to work with Sony, they're already fans in Sony who says, yes, I remember that company. And, the company's been doing well and successful. It's a great time to engage. So that's the mood I think we're really focusing on. So it's really the startup first, what they want to do and how we can help is our most important mantra.
Very nice. And I will touch more on that afterwards, but I'm going to take a Q&A from the audience because I want to touch about KPIs and how you measure success. So one of the questions is, how do you measure success of your work and efforts?
So basically, my minimum job is to keep show a reasonable return on the portfolio, which is at least my company's hurdle rate. And so if I can't achieve that, I'm gone. So that's the risk I'm taking, and that's my job. In terms of the soft factors, of course, there's a certain number of POCs or joint development agreements going on with startups, but that's really not my measure. My measure is more around what type of feedback I'm getting from management, and it's always been positive, so that's most important. I mean, I think so there's many ways, the actual interaction with the startup is also important, but having a team that knows what's going on in the world is also quite important. And because, as you know, in big companies, the R&D groups will come out with all sorts of interesting ideas. But are they marketable or not? I mean, so we can look, in many ways, we can look at certain ideas and says, you know, if it's that space, there's already 10 established startups. So, and because based on what we have, we really don't have a chance. Or we could say that this is very unique. There's a market for this. And so I think that type of evaluation capability, it sort of links to the Pathfinder discussion, but that's also something that the team has developed, and I think that's very important to the company. And that's what the CEO and CFO feel. So they sometimes route these new ideas to us and says, the CFO says, did you hear the opinion of the CBC groups? So that's the relationship we have with management.
Very nice. And so now I want to move more tactical because that could be very useful in the community. What type of KPIs, and I'm not talking all the KPIs, but what type of KPIs are the most meaningful, not per individual, but across the team?
So I think meeting many startups is obviously the first and most important KPI. And I think the second is that we usually work in groups of so we form these industry groups that, let's say we're looking at fintech or we're looking at healthcare. There's somebody in Japan, somebody in US, and somebody in Europe, and the team will work together to come up with an idea on where's the best place to invest. And so and how those teams work together, and so that is also quite an important point that we look at. Obviously, if somebody has come out with a very successful exit, that's also very positive, and obviously that will be reflected in the returns that person will be receiving. Am I answering your question, or what type of other?
No, I think you're answering, and maybe I'll go into a more detailed question that comes from the audience, because that's actually about the financial. So one of the questions is, should CVCs be incentivized with corporate incentives, salary, bonus, or venture-driven returns like carry?
So I think we're a bit unique in terms of how we structure ourselves, and I think, so easily said, I think so as management, we're open to pulling together a carry. I think this might be more of a transition over time. And the reason I say this is that we're not funded 100% off of Sony's balance sheet. We believed that the GPLP structure is the sustainable structure in this business. And we pulled together a GPLP fund last year with a 50-50 JV with Daiwa Securities and Japanese megabanks, finance companies, and school funds as investors. They are obviously looking for a return, and they found comfortable that the Sony team is worth investing in to produce returns. And and naturally, there is a discussion around how we incentivize people. So at this point, we're all managing this within the Sony compensation framework. And of course, if somebody shows a return, that will be a very positive in the evaluation. So the carry discussion is something that's in the horizon.
Okay. So because I know that you have your first fund, which was $100 million, Sony Innovation Fund, which was 100% Sony as an LP. So I guess in this case, the carry was a different discussion. But with Daiwa Capital and other LPs, clearly there's an incentive on the financial returns. And I'm sure they feel you're going to do a good job because Sony also put 50%. So I'm guessing that carry makes a lot more sense when you have more than one LP already.
No, I think it's really the natural extension. I mean, so we talk about company-based compensation and we talk about carry, but it's really if you are successful in your investments, I mean, what type of return you get. And do we combine, you know, how do we divide it into the team component and the individual component? Because at the same time, we want to foster teamwork, right? And I think one point to note is that the corporate compensation is also at the same time shifting more to you know, professional-based compensation and more of a result-based compensation. So, in a sense, are we going the wrong way? Not at all. We're basically going in a more you know, more with more clear incentives. It's just what box we use is the discussion point, I think.
Like you said earlier, even for your first fund, you want to pick the winners. So you want to be financially focused on the returns. Now, we talk a lot about money, but let's talk about something that's meaningful for the world and contributing to the world. And you talk a lot about SDGs, the United Nations Sustainable Development Goals. And I know that you are looking at investments with that filter. Can you tell, one, how you do it, and two, how much rigor is needed to make it well?
So I think, so SDGs are very important to us, and diversity is also very important. If I quickly touch on diversity, our first investment, Defined Crowd, was run by a lady called Daniela Braga. And so our first investment is run by you know, a woman CEO. And it's interesting that even in the Japan investments, we have 3 companies with women CEOs. And so that's, I really appreciate that, and they're doing great work. And and you know, it's something that I like to continue to foster and support. In terms of the SDG, there's many different aspects to this. To begin with, so are we investing in companies that really burn coal? No. I mean, many of the companies are trying, what we invest in already are trying to make the world a better place. And on a larger scale, fit into many of the goals that related to SDG. But we also felt that a more focus on impact type of investments was very important. That's why last week we announced the Sony Innovation Fund Environment. We're going to start off with 10 million US equivalent size. You know, it's a small, you know, seed to early fund, but we want to invest in areas like related to climate change, related to resource savings, related to biodiversity, and the like. And so we're not going to say we're experts on this at all, but we believe in the community, and there's a very significant community related to this, and we want to learn much from the community and taking steps there. At the same time, we're taking active steps to pull in an ESG related evaluation metric in every investment we make in the CBC area. So some companies may be borderline from an economics point of view, but if they have a very strong ESG positive factor, we may just decide to invest in them. So, and obviously these are not one-time things, it's something you continuously need to track. So we're starting off with people who have some experience, have some experience related to that area in that mix. And in terms of the impact fund side, it's a joint venture with our internal environmental group. So there's a lot of things going on at the same time, actually.
No, but I think it's very interesting what you're describing, which is really, there are times you will make judgment call. Maybe the financial is okay, not great, but you feel like it's really contributing to society, and that's going to tilt one way or the other. And I think that's very interesting, and maybe that leads to a question about your investment committee. You mentioned there are 6 people, and maybe, are you part of the investment committee?
Yes.
Okay, so 7 people. How do you decide to go for an investment or not? And do you have multiple rounds or one round to decide? How are you structured to make these decisions?
So we decide in basically 2 rounds. One round is for the DD approval, and the second round is for the actual investments. So the investment committee members basically have 2 chances to take a good look at the company. So what was your other question, going back regarding to the
so first I want to say, when you say DD, it means due diligence, so that everyone knows. Okay, so I'm how to say that? I guess what I'm trying to think is, you have the first round to decide the due diligence, which means that you already have a view that it's good for society, it has a potential to be a winner. But the second time, let's say the financial is okay, but it's really good for society. How do you make that decision when you're 7 people? Is that easy? Is that difficult?
We haven't discussed in depth on that, but I think my view, and I think everybody would agree, is that I think we're all believers that if you follow the ESG or the SDG path, that is going to result in scalability.
Yeah.
I think the investment committee members have a very strong background in creating many businesses and creating new R&D areas. So when we hear the explanation, everybody's thinking through themselves and saying, this can scale. And if that aha comes together to come to a positive decision, and obviously SDG, ESG related matters are quite important in how we look at the world going forward. And so my point is that, the fund, that's how we think about most of our investments.
Yeah.
And some are a little bit light on SDG, ESG factors. Some are deep in that. But it's all a very very fun group of companies, and we just love working with them.
Very nice. And you're 7 people in the investment committee. Is it a vote where 4 is enough to decide to go ahead, or do you need everyone to agree?
We need everyone to agree.
Okay, so the bar is very high.
So usually for certain areas, maybe there's one expert on that specific area. And if that person feels very strong about it, he will veto.
Yeah, that makes sense. Okay, that makes a lot of sense. I want to take one more question from the Q&A. Do you face challenges, pushback from internal operating unit when you introduce strategic startups into the Sony ecosystem?
So when you push back, you mean
from the business group?
Like don't invest, or that type of nature?
I'm guessing that's what the question is about, which is sometimes you want to invest, but maybe some business group feel differently.
So I think it's fair to say that if Sony is going to be a direct competitor of that startup, it's just gonna put us in a very awkward situation. So I think that's you know. So do we want to learn about the company? It's probably not the right relationship.
Yeah.
But I think it's fair to say that I think we found that it's a very that doesn't happen too often. It only happens in a very limited situation. And so I think because Sony is a big corporation, and the startups are trying to do something very, very detailed and very practical. And so I mean, the view of where the business is going, it's not a direct comparison of what the two are doing.
Yeah.
So I think we seldom see that situation.
Very good.
Now,
Actually, I remember from your presentation earlier this week, you talked about the value of Sony as becoming a customer. So definitively a much more healthy way to do it. Can you describe a good example of how you helped a startup as a mothership value being a customer?
So Sony, I go back to the point that Sony has actually many businesses.
Yes.
So like we invested in a Japan-based robo-advisor, a fintech company, and actually we are selling their products via Sony Bank. In other situations, so we are also managing the Uber-like service for taxis in Japan. And we invested in a UK company called What Three Words. It's sort of is a sort of mapping situation, but every 3 meter to 3 meter area you can describe with 3 words. Strawberry, cranberry, and apple, or and it's actually used quite often in the UK emergency system to identify because if you addresses always do not serve the purpose. If you want to really point to the right place, I mean, so we are using their service in the Uber-like system for taxis we have in Japan. Or that's I can go on talk about all these examples, but so I think some startup says they want our help on their IP strategy. Now we're not the lawyers, so we don't go in and do execution, but we have a pretty strong IP group, and they really want to learn from how to make the strategies. So we really leave it up to the startup how they want to work with Sony. And actually, in many ways, they tell us that this is probably the right relationship, and it actually is. It sort of opens up doors for us to really find out some new things that's going on in Sony.
Maybe one question I have about this is, when you invest in a startup or you consider investing in a startup, is your ability to add value to that startup a criteria for investing? And what I mean is, if you don't see an opportunity to contribute to their success, then you don't invest.
Well, so you're looking that I'm not too comfortable with that discussion. The reason is that you're only looking at now. So I think we're more we believe in the future.
Yeah.
And you and I know that startups in 2 years could change dramatically.
Yep.
So we're basically looking for companies that we think can scale and open new frontiers. And so in many situations, the real relationship between the company and us may be in the future. Now they may go a totally different way, but actually Sony has a pretty wide range of businesses, and so the touch points are actually could evolve in many different ways.
I'm actually very glad you didn't like my question, because your answer is exactly what I'm looking for, which is, if you can find short-term synergy, this is really good. But what matters is you want to go in the same future, and maybe you want to explore new business models, new technology, new markets. So to me, what you're talking about is a real strong long-term strategic fit versus short-term tactical gains.
Yes, so I think this is something that comes from Sony's history. So I used to be a business development person, and obviously I've worked with Google, with Amazon, with everybody. But we've seen over the years, we've seen startups grow quite fast in a fast pace around us. And so this is, and the thinking is that wouldn't it be great if we really could have created a more of a stronger relationship with these startups when they were small, and observe them grow, and that could have opened up totally new different ideas that we couldn't have think about. So that's the thinking that's going behind. So going back, we were looking for adjacent. My colleague Ludovic explains this always really well, but we're looking for adjacent opportunities and adjacent companies which will grow.
Very nice. I really like it. Now, I want to go back to something you mentioned about something very important, which is you have invested in a number of startups. I think I remember a slide showing 8 of them, which has female CEOs. And I want to understand how much of that comes from how you recruited your team, and how much of that comes from your own processes and to avoid any bias.
So it's just we really didn't do anything intentional. It was just a natural, it was just a consequence. And so Sony as a culture really is a pretty diverse culture. And so I think that's the basis. It all comes from the nature of Sony as a company. And that's what I really appreciate about this company. When we looked at the first company and with a woman CEO, I mean, that really didn't even come up as a discussion.
And maybe that's a very good thing. Okay, very good. So I want to talk now about something which is maybe some people will argue is a vanity KPI, but for me, maybe it's more of a sanity check. And in your presentation, you had 6,000 projects came to your way. And out of that, you made 60 investments, which means about 1% of deal flow to investment. Would you say that this 1% is a good KPI, a vanity KPI, a healthy KPI? How would you characterize this ratio between all the things you look at and the one you decide to invest?
Nicolas, I think you would share my view with me here, but in a sense, this 1% or 2% discussion is a bit misleading. So I think what we usually do is that we need to learn. So I mean, we look at many opportunities, but as we start to narrow in on a certain business, then I think that really there's only 2 or 3 companies that are in that competition, and that and one of the companies may not allow us to invest, and then I think within the remaining 2, I think we'll invest in the company we think has more opportunities to scale. So I mean, it's just that we don't. Being an ex-banker, I mean, I used to depend lots of research reports and consultants. But what I really appreciate about this opportunity is that it's really ground up, and meeting startups and getting to know them, and it's actually quite interesting when one startup you met 3 years ago has totally changed their business model and comes up with something that's even interesting after 3 years. So it's so dynamic, and you really need a good team to keep track of, at least keep track of what's going on. And I think that's what's fascinating about this market.
I agree with you again. And so in TDK Ventures, we look at what we call the king of the hill. And that doesn't come from us. Actually, it was Ben Hu from Sierra Ventures who told me about this mindset. And so we look at who we believe is a king of the hill for a small market. That's why we call it hill. But we believe will become very big in the future. And you end up with a choice of 2 or 3 very quickly. And what matters with the king of the hill is there's more likely, the ones that are more likely to get the alpha customers, pivot next, get the beta customers. And as they do that, we start to learn so much more. But also, if they're the king of the hill, they're more likely to be the one with financial returns, financial success. So we have this king of the hill that comes from Ben Hu, and it really helps to crystallize very quickly, not 100 startups, but maybe the 2 or 3 we really need to deep dive. So I totally agree with you. And you made a point about you need your team to be very good at tracking this. It takes a lot of resources. And I wanted to ask you a question which is very tactical for the audience, which is about team sizing. How do you decide if you need 10 people, 20 people, 50 people in your corporate VCs? Can you give some tips for the audience?
Well, I think it's fair to say that so it goes back to the point that Sony is has many business units and many business lines. So naturally, the universe for Sony to invest in, even when we say adjacent areas, the adjacent areas are actually quite large.
Yeah.
And so we have people who are really looking at semicon devices. And we also have people looking at entertainment frontline. Now, like remote live these days. So these are very different things. And so naturally, there's you need to have some expertise in certain areas to really go after these opportunities. So I think that's a very important factor in sizing the team.
Yeah. So I don't know how many you have in Sony Innovation Fund, your first fund.
Yes, so we have 2 funds, but it's run by the same team.
Oh, I see. Okay.
We have one team globally, and there's roughly, in terms of headcount, there's roughly 10 people in Japan, 10 people in US, 10 people in Europe and Israel, and a new member in India. But in terms, they also do activities other than CVC, like just pure tech scouting or mergers and acquisition execution, so that I would say, a weight adjusted headcount would be somewhere around 15.
Okay, that makes a lot of sense. And so maybe we move to what's very important, which is you help the entrepreneur, you help the startups, you learn a lot. How do you bring back the contribution back to the mothership, back to Sony? And how do you assess the value back to Sony?
Well, the easiest way is that, so when you find an opportunity, you also locate the internal expert at the same time. And that, of course, there's sharing information and that whatnot, things you need to be careful about. But in many situations, it's pretty an open environment, and that we would bring in those people who are related to the startup into the discussion and into the evaluation process. So through that opportunity, obviously, the engineer will have exposure to the startup, and so that's the most day-to-day.
Yeah, that makes a lot of sense. So we're nearly at the end of our interview, and I kept one question from the audience because I think it's a good way to finish. The question is, if you had to give advice to someone wanting to get into corporate venturing industry, what paths or skills would you recommend they follow?
So probably the most essential skill is that you need to love people and you need to believe in the community. This is such a fantastic community, and it's just fun to be dealing with the community on a day-to-day basis. And so, and naturally, Nicolas, I haven't really met you, but being people who are in the community, that results in immediate respect. And so I think that respect, having people skills and really respecting the community, I think that's going to be utmost important, because I think I've seen people who have that really develop themselves very quickly because everybody's willing to help that person.
I can tell you again, when I mentioned I was going to interview you, I received so many messages telling me, wow, Gen is so nice and he's so good. So you definitively love people and people love you back. There's no doubt about it. So, but this is more of a attitude, which I agree totally with what you're saying. It's a high-touch industry, if we want to make it into one word. But at the end, it's people to people. And if you respect your co-investors, you respect the entrepreneurs, you really want them to succeed, you're in the right path. But some of it is still about skill set. You talked about training. So for the audience, if there was one skill set that really matters, which one is it?
So the capitalist work, I think, is that you need to know a certain amount of knowledge on a lot of different things.
Yep.
Legal, accounting, finance, industry analysis, corporate governance. But I think the flip side is that, for how our management looks at us is that, if you are in a big corporation, you're a function. But if you are a capitalist in the CVC group of a certain company, you will learn all the 9 yards. That's actually a great way to educate people for future management. So, and that's actually how my current CEO and CFO were chosen in that position. And so, I would recommend those who are interested in coming into this business. It's just a great learning experience. And you need to, there's a lot of boxes to check. So, just bear with that. But after that, I think you'll be able to talk about like a senior management person, somebody who can run a company.
I think you're giving a very inspiring way to look at corporate venturing, which I totally resonate. Every day you learn something new, and every day is special, and you get to talk to really exceptional people. You learn new technologies and market and use case. Yeah, thank you again. I think it was a great interview, and I would be surprised that you haven't inspired many people now to either go into corporate venturing or to really double down on it. So thank you so much for your time. Really appreciate it.
Well, thank you very much. And we have a great team. So, those who are listening, feel free to engage with many of my teammates. And Nicolas, thank you very much for the moderation. It was great talking to you as well.
Thank you again. Thank you. Bye.
Bye-bye.